All right, Daniel, you got the worst tee. How's that ref going to even see you? Okay, that looks more like it. All right. That's enough, guys. That was tees. That was all I could come up with. We live in Tennessee, at least a couple of us do. And we got tariffs and Trump. So that's what all the teas are about there, because it seems like
those are all of Josh's favorite things.
Especially Trump. Trump.
Tariffs, Trump, and Tennessee.
Taxes.
Texas. There you go. That could have been a fourth.
Not Texas.
Everybody claim one of the
taxes.
Taxes. Okay, yeah.
Tesla in Texas. All right, that's double T's. All right.
That's a triple threat.
Hey, guys, you walked in not on a coach that's mad at the players and the refs. You walked in on 4 people here doing After the Bell from Arbitrage Trade. And the guest, as always, in the top right-hand corner is Daniel Hopwood. Say hello, Daniel.
Hi.
Oh, he's quiet today. And then in the bottom left, we have the Grizzly. He's wearing his Memphis Grizzlies because we have the draft coming up. And Grizzlies could be good next year, but this is not what that kind of podcast is or vlog. Anyway, that is JP Morgan, the bank. And then bottom right is the big guy, the boss, the creator of all this, the creator of the seemingly magical algorithm we have that uses a bot called Pips that we give a good. See that little thing in the middle? You guys can't see it there, but on the final product, when it comes out, we have a picture of Pips there that's giving a little wink, like he's got something he knows that nobody else does. All right, so I am Darin, of course, and this is After the Bell, and I gotta do the whole disclosure thing just so people don't try to use us as advice. We're not financial advisors, and this is not financial advice. This information provided is surely for educational entertainment purposes only. Please always consult an investment professional before making any financial decisions. See, I'm getting better at reading that because I'm reading Royce's book while I'm doing the voiceover. And all those is the hardest thing to voice because I'm learning as I'm going and learning these new terms and these new people who created these things. And I have to cross-reference through pronounce this, YouTube, please. It's fun. But I am learning stuff because he mentioned something earlier today, and I was like, "Oh yeah, that was in your book." So I mean, yeah, I'm definitely learning. Back when I was,
you absolutely know I wrote it because I'm like, hey,
yeah, that's right. I was talking about pinning the price because us apes, we know about pinning the price, and that happens almost every week to the Max Payne. And so I was talking about that, and then of course he brought up the terminology for what that is, not just pinning the price, but the actual terminology, which was what? What'd you call it?
Points of control, basically.
Points of control. That's right.
Where the market basically has stopped, or people were willing to buy at that price when it previously touched that price historically, and basically based on those decisions, they either buy or let it go. If it falls below, they're like, nope, cutting losses. That's where the point of control is.
Yeah, points of decision, I guess, is another good way to say it. All right, let's jump. Yeah, PLC. Let's get into this. The markets today, kind of, I don't know, lukewarm. It was. That's why you see green and red behind me. Is because we basically had S&P was flat. Forget the Dow was up or was it down, and then the Nasdaq was up or down. I forget which it was, but they all equaled out basically to a big flat zero. Let me go ahead and just run through it then. I will show what the numbers are because we always have to update it a little bit because Daniel goes to sleep and then the world changes and then he wakes up and then joins us.
Because he's living in the future.
Yeah, not as much though right now. Yeah.
We're all a lucid dream to him. Don't worry.
And if he hasn't had his monster, we really are.
All right. I actually wake up in another hour and I go, huh?
That's right. Did I just dream that or did I actually participate? So the final numbers were the Dow was down 0.25, S&P was flat, like I said, NASDAQ was up 0.31, gold 33.48-ish, crude WTI 65.19-ish. The Dixie dropped to 97.72. It's been dropping a lot lately. Bitcoin has been moving back up after scaring everybody, and it's at 107,640. And the 10-year, which is what everybody looks at, is at 4.285. The last check, I'm sure it's moved since I checked it because it is a fluid situation. So nothing huge has happened. Anything you want to throw in there, Daniel, now that you know all the numbers, the current numbers?
Yeah, the only thing that I kind of saw an interesting formation on was, if you look at the 10-year, not the yield, but the actual bond, it's kind of forming this interesting bottoming formation and just had a nice buy signal in the arbitrage band on the daily. And,
nice.
When you look at markets are approaching the all-time highs, they're literally, within like a fraction of a percent from hitting them. But then you see, gold and the dollar dropping. It makes me wonder if there may be some event that comes up soon that cause a flight to safety, and you see bonds rally, which would mean yields.
That's what I'm expecting.
So
It's what the charts say, Royce.
That's exactly what the charts say. That's why I'm
whenever
like,
he says, whenever he says that, it's not
go watch the Sunday seminar.
Yeah, exactly. It's not an opinion or a feeling. It's what's the charts say. And like we've always said over and over again, it's so funny because it's like the news is formed on the charts, not the other way around. The charts don't form on the news. So it's almost like they go out and they say, "Oh crap, we can create something to justify what's about to happen."
Because as long as you have a reason, people don't question it.
Exactly. No, except for me. I question everything. So all right. I like this. You named this Tidbits. Very good. I'm glad you got that right, by the way, and said it right there. Tidbits. So let's move on to Tidbits. His Tidbits, he says, money market funds hold around 7.4 trillion, the highest it's ever been. Woo! Then you
lot
said
of cash still on the sideline to be deployed.
Yep.
Where is it? In treasuries? Where is, when you say cash, you want to tell people
money
what you
market
mean?
funds hold short-term treasuries. So you're getting like whatever the front end of the curve is, but it's essentially just how you hold cash in a brokerage account, right? So it's the highest it's ever been, which means there's the most, at least in recent terms, the most money there's been on the sideline, which money wants to be deployed when the timing is right.
So how do you know that's not cash secure puts out there?
I don't think everybody is running your strategy.
What you doing in a bear market?
I think you're a bit of a hammer looking for a nail with that one.
No. If it's just sitting there, you don't think they're actually making money on it. Come on now.
Well, yeah, they are. It's in a money market fund.
Okay.
Well, to add on to this, by the way, before you guys get in an argument, verbal argument. As you guys know, I do the Fred reports, etc., and I watch people that use those Fred reports because you'll never get them on mainstream media because they tend to tell the truth. Is how much money is in shadow banking right now, and it's almost at a scary level right now. So it'll be interesting to see
shadow banking and private lending.
I think that's part of it. That's a group of it is private lending, is shadow bank.
So how's it shadow?
And then some shadow that's offshore, etc. Oh, I know. All I'm saying is
question. I'm not begging the question.
Well, a definition of shadow bank, it's just, it's not your traditional lenders. It's those that are not regulated, in quotes. They're not checked on, blah, blah, blah. They live by a different livelihood. Is that a lot of banks a lot of entities are looking towards shadow banks instead of your traditional banks. And it may be possibly even the actual banks are using shadow banks for leveraging capital, blah, blah, blah. So it's just right now, it's a scary thing because people are having a hard time finding that liquidity, and they have for a while, but they've looked towards these shadow banks, and now the shadow banks might have their day of reckoning. And if they do, then we could be back to another financial crisis situation. That's just from what I have gleamed across those that watch the Fred reports. You know one of them, by the way, Royce, the Eurodollar guy. Yeah. He goes, that makes sense now. And Stephen Meter, that's another one that loves those Fred reports. So anyway, I will move on.
He's trying to get us canceled, and like if when they come looking for you, I would say his office is in the back by the microphone.
Remember, I'm in the basement.
Take him out. I'm having meetings.
I'm in the basement. That's right.
Do it quietly.
Do it quietly.
So, I mean, your second point under tidbits, by the way, Daniel, was that a bullish option score has gone from 5 to 1. So both of those kind of could mean the same thing, right? As far as you're in cash and your bullish is down from 5 to 1, those kind of go hand in hand, right, Daniel?
Yeah, I mean, it just shows that, what was a once heavy call environment is now skewing towards most likely hedging, right? So you used to have a ton of calls. Now it's either not many calls and increased puts, which it is a good price point to do it because the VIX has dropped. So it's much cheaper to hedge now than it was, a couple of weeks ago.
This is an interesting paradigm because I always marvel at how people look at markets, right? And saying that calls, people automatically think that you're bullish, but that's not the case. If you're selling calls, you're actually bearish on the market, hoping that they don't take your stock away and that you keep the premium. So you're actually wanting the price of the stock to go down so you just collect the premium and keep the shares. Where if you're investing heavily in puts, you're extremely bullish because you're selling the premium, wanting the price to be above where it currently is, so that way you keep the premium and they don't try to assign the stock to you. And if most people are sitting in cash, that seems very bullish to me because they're sitting on the sidelines just trying to collect the premium as basically the market tries to settle itself and potentially find new all-time highs. It's a safer play. You don't have to watch both your money on the stock as well as protect, basically try to hedge. You're just sitting, letting it be collateral and watching the market go up until it's safer to be in there.
Options book coming out next.
Oh, yes. By the way, I am about 13 chapters into the brand new book, Investing in Options, Part 2 of the chain of books I have been releasing.
You have many real-world examples to share with that, for sure.
I do, actually. And what to
exactly
do when it goes the wrong way, when it goes the right way. But this isn't a commercial. This isn't an infomercial. It doesn't Julian Fries. Sorry.
Yeah. Make money on the way up, make money on the way down. That's pretty much just
absolutely
in a nutshell. The last thing about the whole hedge fund thing, I did run across something that was out there. Hedge fund leverage hit a 5-year high last week, with speculators buying banks, trading companies, and insurance firms. Goldman Sachs data showed after U.S. interest rates held steady and just before U.S. attacks on Iran's nuclear sites. That's where it was. Gross leverage, a gauge of how much hedge funds are trading, rose to roughly 294%, which is the most since 2020, And leverage was at 271.8 at the start of the year. So it's gone from 271 this year to 294%. So that's another look into what's going on maybe behind the scenes, because you won't necessarily get that information on your CNBCs. So anything, speaking of, since we do have a banker, at least we call him that, Josh, you got anything you want to throw in there before we move on?
I just think depending on when these numbers came out, as far as the bullish option score, realistically, we had triple witching last week. So you're kind of seeing, to me, you're not seeing as much of like a doom and gloom scenario, because again, we've talked about this months ago where we're not seeing as much of the buy and hold. We're seeing a lot more call option trading. And so I think this could have just been more of a resetting of the positioning versus
rebalancing on the portfolio.
Right.
Yeah.
We're just, because, you had the expiry last week, triple witching. It's just kind of they're just basically rebalancing. You know, I don't think it's necessarily doom and gloom. I just think it's more of the same, and we're kind of seeing that event. And again, none of the uncertainty has been removed in the market. So you're not going to see a lot of volume pouring into equities or anything like that. So I think it's just kind of a outcome of the circumstances.
Yeah, volume is low, isn't it? Right now,
Yeah.
just in general.
Yes.
Typically, that's how the market rises, by the way, on low volume.
Gotcha.
Well, it does. I mean, when you start getting into oversold and you start seeing, you know, more like a consolidation pattern and things like that, which is kind of what Daniel was saying on the 10-year, you know, you might see some people actually jumping back into equities, but I've not really seen any evidence of that so far. Like everybody, to me, it just seems like people are still sitting on the sidelines, kind of waiting this out to see what's going to happen. You know, you got Powell, you got Trump, you got the markets, we've got
war, you got,
I mean, everybody's just kind of like, what are we doing here? Let's wait and see. And, you know, again, once we get a little bit more of the uncertainty removed, I think you'll see people start jumping back in.
Good segue there, because the next section is about that. War is no worry. It's almost like he knew where we were going with it. So it's true. We continue to like go back up to all-time highs, up and to the right. We did not hear the annoying thing that Daniel usually says.
Yet.
But yeah. So
Darin, we are one healthy, solid green candle away of reaching the previous all-time highs before my catchphrase comes back. Right, don't hold your breath, because it's coming.
So go ahead and give us
prepare ourselves for next week.
You get
well, maybe I don't know. That could happen while I go to bed.
He's not giving the time frames. Well, actually, I've been saying June is the crazy thing that's going to happen. I guess it's being pushed to a later date, like everything else in our economy, and it's going to be end of August, September now.
He's agreeing with me now. Oh no!
Now it's because of the whole.
He's finally on board.
Well, it's because of the whole. They're saying it's not going to be a July cut. It's going to be in September, and so something bad probably is going to happen that makes those cuts happen, because we know that the Fed is always behind, purposefully. And it's going to happen in September now is what they're saying. So unless something crazy happens and somebody goes off plan, like the 7 leaders of whoever makes all this stuff up, the script and everything, unless somebody goes off plan, then that's where we're going to be in September. So anyway, Daniel, you said something about 1939 stat.
So Deutsche Bank did a little historical research, and looking back since 1939, following like a conflict, within 3 weeks, the S&P will drop up to like 6%, but it often fully recovers within another 3 weeks, which I thought was a very funny thing to read, because we recovered in 2 days from the small drop we had, and now we're higher than where that started. So I just thought that was a fun fact of, everything was looking at World War III. Someone asked me, I'm in Singapore, right? What happens if I get drafted? I remind them that I've only ever had a desk job, and I weigh 145 pounds, so the gear is heavier than me. So I'm not worried about it.
They need people to go in the tunnels. Come on, man. I mean,
I always say, like, my dad is always like, oh, what happens if they draft you? I'm like, dude, they're going to have me flying a drone behind a desk. Like, they're not putting me in combat. Like, get real.
World War III, the video game.
They're gonna look at my resume. They're gonna be like, "Oh, great, you go in like the finance department. Like, here are some spreadsheets, like
logistics and finance." Yeah,
yeah, right. I was
when we're doing after the bell and he's in a trench, just know that he had it coming.
I'll call in.
I mean, you forget though that like the Air Force has like height and weight restrictions, so they always go for the little guys.
There you go.
That's fine. I'll fly a plane, except I wear glasses. Once again, I'm in a chair.
Oh, that's
not to mention in Asia. Aren't you tall in Asia? I mean,
I'm average height.
Oh, that is
average height.
Oh my God, you can't say that.
No, he's not wrong. I go to the Philippines. I'm like, oh man, I'm kind of big here. I go back to America. I go, hello.
That's what I'm saying. They're calling you Big Poppy over there. So anyway, it seems like every single thing that could be construed as negative over the last, I don't know, 40 years, I don't know, it seems like there's a bounce back. So I know that's a little microcosm what you were giving there of the SPY falling 6% and then recover within 3 weeks or 2 days, like you said. But it just seems like that's what's been happening, especially since Trump got in office. That's what happens every time. So it makes you feel
All right,
like
so now we transition to
purposeful.
conspiracy corner, and I need
Like-
everyone's black swan that's coming. What something's got to bring this market down, and so far it's not even potential World War III.
No, wait. Okay, and Darin, you're gonna love this one. There's two reasons why the reaction was so, like, why we bounced so hard so fast, and why the reaction was so relatively muted given the gravity of the events, meaning a global war. One was because Iran's retaliation was
planned.
limp.
They gave advance notice even where they were going.
It was like, I mean, they knew, and I mean, they pulled their uranium and everything out, and they probably going to end up rebuilding at some point. But the other reason is because it was one big, beautiful distraction.
Yep.
You got to think.
I mean, beautiful bill.
One big, beautiful distraction. Like now, we're not talking about the historic protests, the largest protests in U.S. history that were going on just a few weeks ago. We're not talking about the politicians that were assassinated. We're not talking about the birthday party and the relatively weak turnout that was the birthday party. We're not talking. I mean, the ICE raids are still, they're still a thing. We got Crocodile Alcatraz down here. We're not talking about, the big, beautiful bill getting swept under the rug and, kind of not swept under the rug, but secretly getting passed along while everybody is distracted with, oh my God, we're getting into World War III. And we're not talking about the historically low polling numbers. Like all of those headlines have been erased, and it doesn't matter which news channel you go to, because the goldfish memory that everybody has right now, as far as this media cycle is concerned, it's now just, it's like they completely erased all of it. And
all right, Josh. So Josh, wait. So I'll ask my question again, though. What will bring this down? All of your points very relevant, and I do agree, but that doesn't answer the question. Like that just shows of how much tougher this market is to bring down.
No. It's not actually that. It's the fact that it's all words. Like these were not. I mean, yes, this was a kind of, sort of an event, but until we get something concrete, until we get something.
So what do you think
tangible,
that concrete thing is?
He won't answer the question.
I don't want to know. I'd rather. I don't want to know, because all of this, it's all talk, it's all projection, it's all grandstanding. None of it's really concrete, because you get a person in office that literally would just say whatever and whenever, and so you kind of at some point, and I mean it's part of what does make him good at what he does, but it's also part that makes it super frustrating for everyone outside of his circle, because nobody really knows what's going to happen, and nobody knows really what which words coming out of his mouth are truths, which ones are coming out of his mouth just a distraction or projection.
Hey, I'm just waiting for my pterodactyl. He promised me a pterodactyl.
That's fine. Yeah, let's bring back the dinosaurs, because that movie ended really well.
All right, if you ask me, all right, Daniel, since you didn't ask me, but I'm gonna of course give it my opinion.
No. That was a question to the panel. So
okay. Well, I'll give mine, and then Royce can
Josh.
go.
Josh just avoided answering it. So
he did.
I'm burying my head in the sand. I don't want to know.
He should go in politics. Mine is always going to be, and it always has been, that it's going to be another banking crisis. So that's where I am. It's going to be in the banking system, whether it be the shadow banks finally being revealed how tight they are, and it's just going to explode in their face. And it's basically going to come down to the elites needing their money from the other elites. So it's the 1% needing their money from the other 1%. And they're going to finally take them to task and say, look, I need my money. I've loaned you this money. I need it back now. It's going to force them to do what they don't want to do. And when they try to go through the shadow banks and ask them for the money back, they're not going to have it. So that's what I say is going to
So you
be
think
the problem.
an old school 1939 run on the bank is what's going to cause the market to crash?
We've been there and done that countless
shadow
times
banks,
already.
but shadow banks
It just ends up in
are
government
what
bailouts.
And shadow banks is what is to me the hidden factor here, the black swan that's going to happen. You just asked for my opinion, I gave it. Royce?
All right, fair enough. I honestly think there's going to be another mandate. There's going to be either another strand of COVID, because they basically have to put it around medicine. That's the only thing that will allow biomedical stuff to go down. That's also basically because no voting is going on with this. Basically, another worldwide pandemic. More than likely, you saw what it did to us the first time, and they quickly came out with vaccines. So I'm thinking another scare of some type, whether it's the bird flu, whether it's COVID, whether it's just, hey, we're doing this. All right. So, I think more than likely it's going to be medically related. It's not going to be anything that anyone's going to expect at all.
While the big money gets their money into whatever the solution is, right?
Correct.
Because there was some concert or something somewhere that it was the weirdest thing. Evidently, the people were going out with syringes and sticking people with shots. I saw that in the news somewhere, and it's like, okay, so what does that mean? What's that leading to? But you don't think there's going to be a huge pushback this time after what happened with COVID from that agenda trying to come out?
It depends on the mortality rates that are associated with whatever it is, and it also depends on if it is medically charged or not. Right?
Yeah.
A lot of people have been trying to do all kinds of things. Like, for example, some people even said it may even be Civil War time, because basically Trump wasn't invited to speak at the NAACP, where every other president has, but basically because of the actions that he's been currently doing and the current suits that the NAACP has filed against him, has basically said that, we don't want him here, is what I've read, right? So who knows? They're just trying to divide. And as long as
I gotta say, Civil War is a hot take. I like that one.
Yeah.
I don't think it's gonna happen, but that's a hot take.
That is hot. Yep.
Yeah, because I'm like, hey, all they're trying to do is to divide. If they can get you fighting, it's a sleight of hand, so they can do whatever they want to do.
In a racially motivated Civil War again. That's
Well, they have to return it because that's kind of been waning. That whole it's like you've had, even if you look at who voted for Trump this last round, and we're not going to get into all that, but there was a lot of races that normally don't vote that way that did vote that way just because of they're tired of what's going on in general, and they're going to try something different, which we know that's what they do. Voters just, I got to do something different. So maybe that it'll turn it back the other way, because that's what's always played to divide us. And that's, who said it? Was that a Napoleon thing? The best way to take down a country is to divide and conquer. So when you're dividing a country,
a Frenchman would say.
Yeah, it wasn't a tall tale. I'm pretty sure he said it. Dunk. All right, so that's your take. Okay, good. So, and you gave yours already, Daniel? Your Black Swan? Did you already give that?
I don't think I gave one. I think my take is.
Oh, you ducked it. No, that was Josh. Go ahead.
I asked the question.
Yeah.
But
okay.
I think the take is much more kind of like boring. I think things like, global tensions continue to stay high, not necessarily escalate. But I think when you look at a lot of these various forecasts, you're looking at pretty much slowed global growth. And I think a lot of these tariff deals probably don't get done, or at least don't get done at a lower level that people are anticipating. And I think you see stalled hiring, which ultimately, and a lot of these companies are becoming kind of AI first and looking at not hiring. And you see a slow grind up of unemployment, and you kind of have this like global macro, kind of slowed growth, global unemployment, like higher levels of unemployment, and like multiples compressing back, at least in U.S. markets, to a reasonable level. So I actually don't necessarily think like it crashes. I wouldn't say a recession, because I don't think it's going to be felt that deeply or harshly. I think it's going to be more of like kind of a stagflation, slow grind down.
Okay.
Like, do I think we fall exactly back to another, 20% down from here at 4,800? I think maybe we get half of that. What is that, about like 5,500 on the S&P? And it's just kind of like we muddle along in like a volatile state.
Well, they've played over and over again. The Fed keeps saying that that's one of their big things is employment, and that's what will cause them to lower and cut. And so it's kind of setting up that way, what you're saying, because even like Bumble just announced they're taking 30% of their staff off, and it's because they're going to go to technical. And when they say technical, that's code word for AI, and it's going to be more efficient. And there's a lot of jobs that now have become redundant, and they don't need 2 people to do what 0 people can do, which means AI. Throw in there, but I think you're right. Employment could be, at least that's what it's going to look like on paper and in media. That's what the reason is. Royce, can I throw in the fact that there was, and I wish I could have brought it with me, but every time the Swedes go down to their 0 or negative interest rates, it's a precursor to something happening in the world. So, and they're there. So it's interesting to look at that too. That's another thing you won't see on the news, but it's interesting. I forget what's the Swedish currency. I mean,
the franc? Or is that Swiss? Not Swiss.
Swiss franc.
But it's what the central bank for Sweden is doing now. And remember, they're replacing Japan basically as the place to go now, with the 0% or even negative percent.
You have to have some place to hide your money. You always have to.
Exactly. But every time they have to do that, then there's always a hidden secret reason that's going to blow up.
And remember, it's against the law to yell fire in a movie theater. So no one's going to yell, it's a recession, it's a black swan, it's a XYZ. They're just going to slowly exit the building. Yep. And whoever's left in there, well, they get what they get.
So anyway, whoever's watching, if you want to go look at that and just I don't know, Google Fred Report, Sweden, the bank, central bank, etc. Put all those in. Let ChatGPT take you wherever. It might be a fun rabbit hole for you to run down. Yeah, exactly.
Taking away your ChatGPT. You're using it for evil.
You know what? I'll just go to Grok. I like Grok better anyway. It's more entertaining. All right, so let's move on. It's crypto. I mean, I'm surprised Daniel's not, doing a little dance over there right now. But what do you got to say about the Genius Act, Mr. Daniel Genius?
Yeah, it's the first kind of like regulatory transparency piece of legislative that's been passed like under crypto. Pretty much just makes stable coins, kind of like a viable business for companies, kind of, I don't want to say makes it legal tenure, but more or less there's a transparent framework around how companies can operate with it. And I mean, it's been huge news. So like, I don't know what it is today, but as of when I wrote it, Coinbase was up 35% since the news. Circle, since its IPO, is up over like 200%, which, Coinbase is maybe sustainable, but that Circle IPO, I feel like, has got to come back at some point. It's like pretty insane.
Yeah,
it did today.
75% over the last 3 months.
Look at today and yesterday on that.
I thought it was up more than that.
Nope,
it got all the way up to 250, and now it's back down to 200, I think, or in that area. So it's dropping it's like my son was a couple of weeks off.
From the closing price on its opening day, it's up 139%.
Yeah, it's come back down to earth a little bit. But anyway, it's all about stable coins, and we could probably do a whole hour just on stable coins and what that could possibly do in the future. Is it really Congress just saying, okay, we're really watching it now by passing this act, or is it really going to mean anything in the future?
No, they're setting the foundation. They're setting the foundation. And I think with
I just-
XRP getting a bank, did you guys hear about that?
Onyx Coin and XRP are the two biggies I'm hearing. So
Yep, XRP is getting the bank, and most of Bank of America's internal transactions are done via the XRP network. So,
Yep.
and just so you know, if you didn't know, XRP is not decentralized. It's a centralized
Right.
cryptocurrency, which means everybody reports into the same place, which means you can definitely monitor it and even use it for regulatory, if not IRS purposes.
which is the whole purpose for, I thought crypto was to get away from that. so thus enters stablecoin, I guess.
Into the stable coin, so you still have to, and it's made for international transactions. So that guy is definitely a front runner. I'm willing to bet, literally probably before 2030. Mark your calendars. The 220-ish, 230-ish XRP will probably be about $150 to $200 per coin.
You said mark your calendars. Will we still be doing this show? Let's see, in 20.
I know that
Yeah.
at least 3 of us will be here. That
Ouch.
fourth guy with the red, I'm not sure.
Yeah. You become numb when your job
Say,
is every week.
If that price is accurate, I won't be here.
That's right. Neither will Royce.
That's
He'll have his daughter running the whole company at that point. Let's see.
That's the
So
point.
yes, absolutely. Succession planning. But yeah. I mean, anything else to say about XRP and XCN? I believe is what Onyx Coin is. I forget what it is, but it's something like that.
No, but I think I'll probably do it in crayons when we get there.
Okay. I thought you had SRPT or something like
What
that.
was
Anyway.
what was the symbol for it?
For which one? Circle?
Circle, yeah.
CR?
CRCL.
CL. Yeah.
Oh, that
Yeah,
makes too much
there's
sense.
no way we're doing that. But
Are we going to go there now? We can go there now. Let's see. Let's go to over there.
Ooh, that's bad.
that's what I. That's what I said.
Yeah, it had a rough
All the
day.
way up, and then
Rough
so
couple
yeah,
of
it
days
dropped
there,
over
yeah.
$100 in a day. Yikes!
Yeah.
All right, let's go to the 2 hour, 4
2
hours.
days.
See if I can actually get some history on this guy. Might have to use a 15-minute chart. Oh, that's not good.
Ah,
That's not good.
well, it looks like it's becoming resistance there.
No, you see that little
No.
red triangle?
Yep,
That's
it's
them
going
selling
down.
the news.
Yeah. But I'm just saying, it's like
Tell your son, buy some puts.
again. Get burned again.
However, tomorrow there should be an initial bounce. This is the 1 minute chart, and it's at the bottom of the apocalypse band. It should run to resistance around 213 midday and then fall back down.
Interesting.
Just in case you guys wanted to be there. So, not saying you should buy it or you should do anything else with it, but after hours it is up about $3, which also says that there's a resistance right at about 202.43. So enjoy that. Back to you guys.
Right, we're back. By the way, that was after the bell, crayons and charts, impromptu session, and back to us. Yes, that's right. Let's see what you got next here. Tesla taxi. So speaking of Texas, isn't that where it was in Austin or something? They did this. They started running them, and they had a little issue or two.
Yeah, I think it was great too that all of the driving errors got caught on video as well. So it's like immediately launches, Tesla taxi, stock jumps within 24 hours. Plenty of video of it doing many driving errors, but I mean, just from a personal standpoint, it was like pretty cool to see that autonomous driving is kind of like really coming to fruition. Even like Uber jumped with a big partnership announcement with Waymo. So, when I lived in San Francisco 8 years ago, is it 8 years ago? No, 7 years ago, I remember I used to see the autonomous cars always driving outside of my window, like the Amazon Zoom ones, I think they're called, or something. So it's pretty cool to see now that they're actually something that people can take, and maybe one day it's almost like a asset class that you own, and it gives you money, kind of like a rental property.
Well, Amazon actually is
That'd be cool.
It was one of the 3 things that I did, but Amazon is tweaking their production up on those driverless delivery. I want to say robots, but cars, vehicles, whatever. So so it's really going to go into full scale, I think, starting next year, 2026 at the beginning. So yeah, it's about to happen. It's about to go down, as Pitbull would say. Let's go. Sorry.
I mean, that's kind of my big emerging market that I'm watching is like the robotaxi market, and Tesla's going to play a big part of it. You just kind of little thing. You got to think about robotaxis. Like especially like Waymo is way ahead because they have the software. They just don't have the hardware. But if you think about Tesla, like every single one that was created since 2019 is prepped for autonomous driving. So they have all of the hardware already installed in like 2.5 million cars potentially. Whereas I think Waymo has a total of like 1,500 globally. So if Tesla can get the bugs sorted out and, somehow catch up to the technology that Waymo's got, they could scale exponentially within the, really the next year or so.
Yeah, it's the thing I did in research. So it's Waymo 1, Tesla 2, and Amazon is looking to lap and move its way up, possibly to number 1 eventually. So that'll be a fun thing to watch too. And I'm not saying go buy Amazon stock because we don't give that kind of information, but it's the stories out there, the storylines out there, whether or not it follows through or not too. So that's the big 3, if you will, of the autonomous. And it was just weird to see that Amazon's in the game. I didn't know they were. Plus, don't forget just the robotics in general. It doesn't have to be an autonomous car. It could be everything that's robotic, from manufacturers to retail establishments to everything. Just like the whole Bumble thing. I mean, everything's going to get replaced, and then that leads into what Daniel was talking about, which is the unemployment. So, maybe it's all being set up. Buy now, pay later. You know that we've talked about this a few times, and we've poo-pooed it. And it looks like this could be part of that black swan, at least a little feather or 2 of it. So just tell us what you got to say about that, Daniel.
Yeah. So once upon a time, buy now, pay later did not affect your credit score. So it's almost kind of like free money in a way. And now this year, it's going to start affecting your FICO credit score and the other credit scores. And I thought the kind of 2 interesting facts that were reported with this were that this year, buy now, pay laters will do 108 billion in buy now, pay later amounts, which was up from 94 billion last year. So it's like pretty healthy jump. But then with that jump in increase of loans, the defaults have also risen by 3 bips, which isn't a ton, but when you think about that in terms of billions of dollars, and what that means in just a single year, means people are taking loans for things that they can't afford, and now they can't pay it back, and now more people are not able to pay it back. And so I don't think this specific stat is by any means like a canary in the coal mine, right? It's a pretty small amount of money, small amount of the population using it, but it is a sign of like stress on, kind of middle to lower income, like economic brackets. And I think it's an interesting thought of, these companies, if things do go south, right? People have, less work, not making much money, dollar is decreasing in value. Does a spike in these loans and then also potentially a spike in defaults make these companies kind of like a bad business model?
And the worse your credit score is, the harder it is to borrow money to pay for essentials and necessities. It's a domino effect. And don't forget those student loans that are also being forced to be paid back right now. That is not in the news, but it's back there and it's happening. So you have all these things that are simultaneously hurting people's credit when they need money the most, because they are having a hard time paying for things. So again, just maybe another feather or two of that black swan that's happening. So maybe just everything happening at once. Anything you want to add in there before we move on? You guys,
Yeah.
Royce?
Yeah.
Okay, I had a feeling the banker might.
Yeah,
Okay, so
I'll lick his lips. He's chomping at the bit.
I know it. Did you see that too?
I was excited about this one.
It's dinner time, I think.
Let me paint you a picture real quick. So you've got a company doing aggressively issuing loans to high risk borrowers, like low income, poor credit. They're not checking credit. You've also got low interest rates. They have variable interest rates where if you look at the terms and conditions, they can raise interest rates wherever. You got really no income or asset verification. So you have essentially uncollateralized loans, and you've got little to no down payment required. What does that sound like to you?
Ooh, it sounds like in The Big Short, the stripper owns like 8 houses in Miami.
You know what it is? That's the subprime mortgage lending from 2008.
Yeah, 808. Yeah, I mean,
this is the subprime burrito default swaps.
Literally the exact same playbook that they're issuing that they did from the 2008 financial housing like that caused the housing crash in 2008 is the exact same playbook that like Klarna and all of these other buy now pay later companies are using. It's the exact same thing.
How big, Josh, because you might actually know this number, how big was the like subprime mortgage market though? I have to imagine it was a lot bigger than 108 billion.
I mean, probably, to scale, maybe not. Like if you compare it
I'm just curious to compare like, how big of a, assuming catastrophe and this collapses, right? Like, what is the potential impact versus what we saw in 08? I also know you're not like saying that this is a direct comparison to that. I'm just like curious.
No, it's just, it was funny because I was looking at, the parallels between the two. And I'm like, these are literally they're doing the exact same things. I mean, it's a perfect parallel between the two. I don't know what the exact number is. No, but, and the difference being that the big kicker with the housing bubble, with the housing crisis was the fact that this caused a housing bubble. So I guess what I'm worried about is what all of this, these little bitty loans that you can take out, these 4 no interest payments, and then everybody defaulting on it. Like, what is that going to hit, and which markets is that going to hit? And is it going to, maybe create a bubble?
Okay, so I have an answer.
Oh.
So subprime outstanding loans in 2007 were between 1.3 and 1.5 trillion. So at 108 billion, we're about 1/10 of the subprime like mortgage amount, which is obviously less, but it's also not nothing, right? Like that's
true.
It's like a tenth is like a decent size of that. Like that would still cause like
that's respectable. That's still within reason.
Yeah. Still concerning.
If you look into the Fed reports, and I've said this for the last few
Why
months.
don't you just marry her, Darin?
Well, okay, but wait, the counterpoint is
her name is Frederica. Go for it.
Subprime lending. Subprime lending started in the early 1990s. It didn't come to a head until 2008.
Yeah, and what I'm saying though is that if
so
you look at the
we're
chart,
only like 3 or 4 years into this Klarna, I don't want to say Klarna, the buy now pay later potential bubble.
No, to be fair, I think these companies have been around for quite a bit of time, actually.
Yeah. They just figured out new ways
cycles.
And
Okay,
have you heard about what the restaurants are doing with hey, you can get whatever you made today. You don't have to wait for your paycheck, and then they just take it out of your paycheck later. Which means you wind up broke because you don't have patience to wait.
Yep. It's the credit card for payments. The non-backed credit card. But again, this is all about cycles, right? I mean, who knows what this cycle is going to be? But they used to say 7 to 10 years, and who knows? I mean, now it would be that cycle would be, if it happened, almost 20 years.
Yeah, about 14, 15 years into this guy right now. So
yeah. So, but here I came up with this while you guys were talking, the inspiration. So, we can write another book, Royce, and it'll be entitled "Swaps, Shadow Banks, and Black Swans."
Nope, I
And
would definitely not write about any of that.
but my point is, I think that even when you talk about this, if you looked at swaps and this whole swaps is in there. Swaps is there's a relation between the swaps and the shadow banks right now, and that will all come to fruition. And it's just adding another detail onto what I was talking about with the whole financial crisis part two happening. Probably, I don't know. Now it must be September because it's certainly not June. We've only got 5 days left. So,
Hey, don't count June out yet.
so I'm going to be wrong. I'm going to be wrong.
A lot can happen in 5 days.
It could.
Believe me, I didn't believe that until about 2 weeks ago.
I just know a lot of bonds have to be refinanced in September. I do know that there's a lot of those that have to be refinanced with all of these commercial and company
That's
bonds.
where I'm at. The commercial, I think
Yeah.
there's going to be a lot of commercial properties that are going to default on their new loans and basically like, hey, we're not going to renew. So that means there's going to be a whole lot of properties available and no one wanting them because of the work from home, the COVID-19, and all that.
Commercial commotion. You're welcome. There's another title for you.
All right. Let's see if I can do that for Sunday.
Let's commercial commotion. There you go. All right. So I'll get a trademark on it before then. So let's move on to the crayons because we can talk about Serpent. Is it SR Serpent?
SRPT.
I know it's not Serpent, but that's what it looks like to me. So let's go to After the Bell crayons and charts before we get to the most exciting time, which is the wager. And so this is After the Bell with Royce.
All right. So we're looking at SRPT. SRPT has been having a bit of trouble. Let's go all the way back up to the daily time frame. If you notice on the minute time frame, it's pushing its luck and just about to start a brand new uptrend. So I am expecting this guy to be positive tomorrow in the daytime. It's also I'm expecting a bull run tomorrow. But let's climb the chart and see where we are.
That was 1 minute.
This is the 15-minute. So This is the 15-minute, and also let me turn on the dashboard. So once again, pink line gets to the bottom of the band. Blue line has to come up to meet it. So basically a fair price on a 15-minute chart is about $21.36. If it makes it there before Friday, that'd be great, but I don't think it's going to. I think we're going to wind up getting there sometime, not this week, but probably next Friday, somewhere around that 21.36 area. Going up, the chart, basically there's a 99% chance that it won't be able to get past 2041. So basically notice I'm taking key points on these charts to basically decide where it's going and how quickly it's going to get there. And with our dash indicator, we're showing that with a 99.71% certainty, it should not be able to get over 2041 before not this Friday, but next Friday. Going up to the 1 hour chart.
Gappage.
Notice it's been falling so long that all of the apocalypse bands on all the time frames are saying, yeah, we need to go up. We've been going down for too long. This guy has about a 96% chance of getting there in 2251 if he tries to push it over the next 3 weeks or so. So 1622 should be an absolute bottom on the 1 hour chart. On the 15-minute chart, 1612. So if you're looking for a place to pick this guy up, somewhere around $16 should be that spot. Looking at this guy on the 2 hour chart, also at the very bottom of the band. Come on, I'm looking for the dashboard to draw. And from where we are, notice the percentages fall off drastically because it gets really, really wide. It's been falling for a good minute. So this guy at its heyday where it has its last Z or last top was at about 170. To make it down to a 90% loss, God bless. I didn't want to stomach that. Hopefully no one else did. The spot to get out, according to the charts on this 4 hour time frame, was about 133, and it just couldn't get back over that pink line no matter how hard it tried. Making it to the daily time frame, it's definitely been falling for a bit. So let's actually also turn on one more of these guys turn on the arbitrage band for the daily time frame. So we got the long-term time frame and the short-term on. And on the short-term, notice we're also sitting at the very bottom of the band of this arbitrage band, and everything's turning down. So I am expecting a bounce that should allow us to get back up above 1769 is where our support is, and notice it's sitting right on that after hours. So getting there and holding there is very important if we can get there. And basically on this daily time frame, if we can get there, that's great. Next thing you know, we're looking at about, if it does run, almost up to $29. So there's a potential, because of how fast it fell, there could be a really absurd bounce. If it does bounce and make it up to 29, I would personally still sell, because the pink line is not at the bottom of the band on the daily, and a run up that quickly should make it get reflected, sort of like this guy did, and then he had to fall again. So that's all I got for this guy. Hopefully you can find the bottom on this guy and potentially make some profit. Back to you guys.
All right, that's Sarepta Therapeutics, and that was after the bell crayons. In charge with Royce Wells and Pips. We'll just say that Pips was involved with that because that's what he was reading, and all of those indicators that only we have. So, yeah, it'll be interesting to see what that does. So it looks like you said around low 16s at the lowest, and popping way up after that, possibly, and maybe eventually filling that
about $29, probably before about, I want to say 5 to 6 weeks from now.
Yeah, because
that to be a top for it.
Yeah. Cool. So let's move into the most exciting part, which is
all right. Thank you guys. See you next week.
So I have to say stuff here because
of course you do.
There's a reason why, because I was being, and I got the scoreboard up now, but as you can see, I won again. I've won 2 out of 3. That sounds good when I say that. I doubled up.
1, 2,
this is called strutting and show flow.
I doubled my wins for this season. That's how you make things sound better than they are. But I will also tell you that if you did not listen to last week, I was being given all kinds of hell for going off the norm and not being right next. Even my own teammate, my own ape, was saying, "Why did you do that?" But as it turns out, it's not just a building
That's called
genius.
Luck, sir. That is called
it's
luck, not skill.
It's not just the genius bill that went through Congress, but the genius that happened here. So let me take my glory for 1 week.
You know what they say? Even a broken clock is right twice a day.
I was waiting for that. So 2 out of 3 weeks now. So it could become a pattern. It could become a pattern. All right. So anyway,
let me look at his accuracy percentage.
I would say history doesn't repeat itself, but it often rhymes, and your rhyme is not winning.
Right, 13% of the time, Darin. Good to know. Good to know.
I refrain from a retort to the boss and his score. Let's go.
Oh no! Pick your words wisely, for they may be your last.
He's having. He admitted that he likes for us to actually follow his guide and win these things. So let's go to what, and I have it's kind of a multiple choice here this week. I've already had one poo-pooed, which is the one that we just went through. I had three stocks picked, and that means I gave these guys even advance notice to look at the charts before we even got in here. So that's new, especially my teammate. And it is.
Notice we got nothing. He got
3. No, it was on after the bell. The message, I put it on there. The 3. So it was Circle, which got poo-pooed, and we looked at the chart earlier. It was Kroger, and it is Carnival. Those are the 3 that I looked at. So now we're down to Kroger or Carnival, and if you'll look at those, Royce, and see what we have.
All right, let's go.
Where's our channels go?
CCL. All right.
Hold up now.
I don't know if I should share the screen with you guys. You guys know too much.
That means you're training us well, Royce.
Exactly. That's a good thing. So looks like there's a $5 range on Carnival on the daily time frame, which is very nice. Roughly 21 to 27-ish. Let's see. And what was the other one?
Kroger.
Kroger.
Let's go
KR.
Krogering.
KO.
All right,
They just closed down 60 non-performing stores. And then you see what happened.
Love it. Okay. I love it. I love it. I love it. I love it.
That's been a pattern, by the way, because everything that has bad written on it, the stock jumps. That's what happened to Bumble too. They announced they were getting rid of 30% of their staff, and the stock jumped because of.
Do you know why?
efficiency.
That means they're getting more efficient.
That's what. Yeah, exactly.
Well, also less people are using the app, so you don't need to employ as many people.
There's that.
All right. What's Kroger look like then? Is it?
Its range is about the same. So yeah,
You're on Carnival right now. You're on Carnival
You're
right
on
now.
Carnival.
Back to Kroger.
Yes.
Oh man, I was having fun too. So 7. Wow, that's an absurd range.
Well, it just had that big jump. So.
All right, hold on. Let me get up to the daily, and yeah, that's still an absurd range. So, 60 to 80. Yeah, that's an absurd range.
That would be $4 each.
6. Yeah, there's 4 of us. Do the math again.
I mean $5. Sorry. Sorry.
Okay, so which one are we picking?
We got $6 on one and 20 on the other. So Royce, if you could pick one.
Why am I picking?
You don't have to. I'm just saying, which one do you think is better for the 4 of us? Not you.
I would personally pick the one with the smaller range because it's too big of an advantage to move $20.
Yeah. Well, that'd be advantage to who?
Basically, whoever winds up on the wrong side of it. It's a disadvantage. Like, for example, if this is the top and the bottom is down there, you don't want to do that.
Yep. All right, so CCL it is. We have a range of 6, so it's $1.25 each. Did I get that right, Royce?
$1.50 actually, but hey, $6.
It's true. That would be $5 versus 6. I'm having a bad day. I was just still being exuberant. I was still being exuberant over my win. That's all it was. I toasted my champagne. I've drank the champagne.
Darin, when you went to school, did you get one of the smaller buses?
The brightly colored one. I'm actually pretty decent at math. That's what's crazy about this. I'm pretty good at math. I promise.
I know math good. English too.
Look, the phonics work for me. All right, so Carnival it is. CCL. And the channels, I promise you I can get this right. So we got 2250 and below, right? 2250 to 24. Just waiting for the Royce approval. 24 to 2550. There you go. And 25 plus. So thanks, Royce.
You're welcome.
So we're gonna go. I have a strategy here.
Show my hand. I never show my hand.
I know, but I showed my hand, and I told if you guys looked at the chat what I was going to do, and that is instead of me going first, I'm going to let Josh go first, and I'm going to go second. Strategy.
That's still fair, right?
Strategy.
Well, that's also stupid. I don't know.
Okay. Y'all see that last? You know what?
Great.
No. That's good because.
What do you mean? I already go last.
That's great. Yeah, you will. What's great about that though is you guys were this way last week or 2 weeks ago when you said that was stupid. So it's looking good. All right, go Josh. Which channel? Oh, he's not sure.
Give me sorry, I had to zone you out for a minute. What were the ranges again? What was the?
Got 22 and below, 2250 to 2250 and below, 2250 to 24, 24 to 2550, and 2550 and up. And or 25.50 and up. Yes.
I'll do 24 to 25.50.
Yep. Bingo. Winner chicken dinner.
You don't listen to him. That's like whatever they say at the poker table. You just ignore it.
He taught me the system.
I've taught him well. He's the only one that's giving me competition. I don't know.
Ouch. Ouch. Ouch.
So you chose wisely, Josh. You chose wisely.
So that means I chose wisely by letting him go first. So that's two goods for the
because you obviously weren't going to pick it.
I think he's looking at a gap fill here. All right.
Darin wins like for the second time. We just berate him.
I know. That's expected though.
As an insurance policy, you should go up. You can't give advice, can you? I just did.
You do whatever you want. You can do whatever you want.
I kind of want to go in the middle at the 22.50 to 24. It's oversold. So it probably is. Yeah, at least for the intermediate in the next 5 market days. Yep, I agree. I'm going above. So we have 20. Above. Yep, we have 24 and up.
Congratulations, you proved to me you are male. Next.
Well, you are next. So go.
So the one that you shied away from, that's the one I'm going for.
That's what I was really pushing towards that, but then Josh poo-pooed it, I could tell. So I have somebody.
So there are dollar signs on that chart, and those dollar signs belong. Yep. Those dollar signs belong to that 4-hour chart. So let's go down to the 4-hour chart and see what.
That's the daily. See, that's why I did that. That's the daily chart we're looking at. Not
but I'm not worried
shorter.
about what happens in the next 6 months.
Look at all those Z's and O's and all that up there. And look at where that RSI line is. Oh, it's so sweet.
Yep. All right. So you guys have everything covered below 24. Daniel being at the bottom. All right.
Yep. And
okay.
So Daniel should win it if it winds up at 22.37. That's basically where long-term support is on that 4-hour time frame.
We'll see if a macro event happens to push it up.
See if I get drafted by next week.
Yeah, that's right. Run the tunnels to get underground. Run the tunnels. All right, guys, let's get out here.
Not a position anymore because that would be mine.
Yeah, Vietnam. All right, it is 10 till 6 here, which means this is a lady one. And Josh and Daniel, I'll see you after this. But let's tell everybody goodbye. We will see you next week from Arbitrage after the bell.
Yep.
Bye. Hey, later, Gator.
No Gators.
I know. I was
right.
We don't have time. We don't have time to bring that whole thing up about the Gators. So let's go. All right. See ya. Avoid Gators. That's all we'll say. See ya. Don't take pictures with them. Bye.